Good day. Today we are going to talk about the buyback of shares. So when we're talking about the buyback of shares, what do we mean? The buyback of shares, it is when we are buying back the shares that we have already issued. Okay? Now we are buying them back so that we can have more control of our company, because if more shares are sold, it means that us as a business, we don't have a control of our company. Okay? So that is one of the reasons why we buy back the shares. Okay? We are buying the shares that we've already issued. That is the buying back of shares. Now, remember, when we are buying back the shares, these shares have already been issued. Right? So now we need to ask ourselves, if that is the case, what is going to happen to the ordinary share capital? What is going to happen to the ordinary share capital, which is an owner's equity? Increase on the credit and decrease on the debit side. Because now we are buying back the shares. Remember, ordinary share capital, it increases whenever the company is issuing the shares or when a company is selling the shares. So it increases. Now we are buying back those shares. So now if we are buying back those shares, now we are using the business money. Right? So, and we want to have a control of our company. So now we are no longer issuing the shares. So it means that we are going to come to the debit side of the ordinary share capital, and then we are going to decrease it. We are buying back the shares. So the account is going to be the bank, CPJ. Remember, we are buying. So if we are buying, obviously it's going to be CPJ. And then the bank is going to be credited as we are buying back the shares. So it's ordinary shares. Right? But then it does not end there. It does not end there. So what you need to know is this. When we are buying back the shares, in the ordinary share capital, the amount that you are going to write in here, we are going to use the average price of the ordinary shares. Okay, we are going to use the average price of the ordinary shares. Let's say, for example, the ordinary shares at the beginning of the year, the shares were 5,000, right? And then they were for how much? It is for 2 rand, which is going to be 10,000 rand at the beginning of the year. And then let's say during the year the business bought the shares for 10,000 rand, right? The business issued the shares for 10,000 rand. So meaning that there is going to be 80,000. Right? Now, let's say we want to find the average here. So the average here is going to be 10 plus 8 is going to be 40,000. Right? 40,000. We want to find the average price. So 40,000, 5,000 plus 10, it is going to be 15. We want to find the average. So the average price here, it is 2 rand 67 cents. So it means that the amount that you are going to use in the ordinary share for the buyback of shares, it is going to be 2 rand 67 cents. We are going to take this amount, then we are going to multiply it with the shares that have been bought back. Okay, we are not going to use the amount of the buyback. Okay, we're not going to use that value of the buyback. Okay, so what I'm trying to say is this. if maybe we bought back the shares, buy back the shares which are 20,000, for example, right? And these shares we bought them back for 5 rand. But the amount that we're going to use in here, it is not going to be 20,000. I mean, it is not. We are not going to use the value for 5 rand. We're going to say 20,000 multiplied by 5 rand, the market value, right? I mean, we're not going to use the 5 rand. Remember, I said you need to use the average price. So we're going to say multiply by 2 rand, multiplied by 2 rand, 67 cents. So multiply by 2 rand, 67 cents. Just a moment. Just 2 rand, 67 cents. So 20,000 multiplied by 2 rand, 67 cents. So which is going to be 53,400. So in the ordinary share, we use the average price, 2 rand 67 cents. Then the difference of 5 rand and 2 rand 67 cents, it is going to go to the retained income. So the 2 rand 33 cents, it is going to go to the retained income. Okay, so because when you are buying back the shares, also the retained income, it has to decrease. So we are going to decrease the retained income. We're going to say 20,000 multiplied by 2 rand 33 cents. So which is going to be 46,600. So this is how we do it. Then we are going to transpose these two here to the bank. So with the retained income, so CPG 46,600, right? 46,600 and also 53,400. So this is how we treat the buyback of shares.